Hey everyone, it is Jay Soloff from Investors Alley, and this is our options trade of the week. So it has been another crazy week, and I am here in Market Chameleon looking at all the unusual options activity. And one of the things that is certainly at the top of the list, that is no surprise, is United States Oil, USO, major popular way to trade oil. It's a essentially a pure play on crude oil as opposed to a producer, a refiner, or a pipeline. So very popular given all the movement in oil. We had over 500,000 options trade, a lot on the call side. So potentially some bullish action expected here in USO. So let's take a closer look and see what is going on. We can go to the trades and then we'll sort those by quantity and see what some of the big ones are. So a fair amount of big trades. It's interesting now because USO is all the way down to 4.5, so a lot more opportunity to get creative with what you do because the options are a lot cheaper than what they normally would be. So you could do something like this here. This is actually a 2022 spread. So that's we're going way out here. That's as far out as you can go with the exchange traded options. And it looks like someone sold puts and then bought calls. So this normally would be a relatively risky trade. If you're selling naked puts or cash secured puts in order to buy calls, you have all that downside if it keeps going down. But in the case of USO, how far is it going to go down? If you're selling the 3 puts, you know exactly what your downside is, and it's not even 3 because oil's not going to 0, right? And USO is not going to go away. It's extremely popular, and it is, far as I know, it does not have any issues rebalancing or anything like that, like we've seen with some ETNs in the past. But this is different. It's an ETF, and should be perfectly reasonable that it's not going to 0. Oil is not going to 0. So the fact that, what's your downside on this? Maybe $2 at most. So this is actually something that anybody can do. You don't need to be a professional trader in order to sell puts at this level. Collect that 76 cents. So they did it 7,500 times to collect 570,000, and they used a lot of that money then, or they used all of it to buy the 5 calls, 5,000 of them. So they still had to spend some money, about 165,000, but not nearly as much as what if they just would have bought those 5 calls all the way out in January 22, it would have cost almost $1.50, which is quite a bit of premium. But by selling 25 more hundred calls, so 7,500 as opposed to 5,000, they covered a lot of that. A lot of that premium. So now, that they could only lose that 165,000. Meanwhile, if oil goes back up, anything above, let's see what's the difference in price here. About let's just say around 70 cents. So anything above 570 then is a winner. If it closes below 5, again, we're talking about January 2022, then they'll only lose that 70 cents done 5,000 times. However, there is the loss if it keeps going down, but again, that loss is capped by basically 0 or 1 or whatever the floor is for this thing. So not nearly as much risk by selling those puts. So this is the sort of thing you could actually do if you have if you have enough cash in your account, because that would be a cash secured put. So this wouldn't actually be something you would need a special account to do, just general options permission. You can see oil, is generally around 12, 11 to 13 for quite a while, dropped down to 10. And then we had the big price war, which plunged, caused it to plunge down. And now it's down here. This is about as low as it's been. So if you wanted to make that trade, you could see, if we'll look in this, as far out as it actually does go out to December of 2022. So this is not quite as far as it can go, but still 665 days until January 22nd. So you're selling this 3, you could see there's the volume, and they bought the 5 calls. there was a bunch more volume there. So maybe they actually bought more calls in different trades, but these two were done together, the 7,500 and the 5,000. But you could see, you could still get those same prices, and then you have, it's almost like buying the stock because you have it for 2 years, except you're getting the leverage of options. So an interesting trade. This is the sort of stuff I talk about in in my education products and my basic services. There's some links on this page for some of my stuff if you're interested. So everyone, stay safe out there, and good luck with your trading.